What's going on, everybody? My name is JT and you're tuned in to The People's Trader, your source for no-nonsense crypto fundamental analysis and technical analysis. If that's the sort of thing that tickles your fancy, why don't you hit the subscribe button? I do this every single day, except for the days that I don't. Taking a look at the news here, Bitcoin balks as the Fed talks. DeFi surge continues. Weekly recap. This week, the Fed signaled that further monetary expansion is planned. Meanwhile, interest in Bitcoin and DeFi continues to skyrocket. So in today's video, I'm going to be covering Bitcoin, I'm going to be covering the US dollar index, and I'm going to pick a DeFi token that a lot of people are really interested in, CHAINLINK. And investors will note that as central banks introduce new monetary expansion policy, Bitcoin and altcoins have begun to forge their own path. Central bank policies, first crafted in the wake of the Great Recession, which were then seen as extraordinary, have become ordinary, and concerns are creeping in from all corners of the globe. Quantitative easing, low interest rates for prolonged periods, stimulus payments, and other actions have increasingly been used to prop up the economy, jobs, and financial markets, ailing from government response to the COVID-19 pandemic. This has caused the United States Federal Reserve and Treasury Department to once again rewrite fiscal policy rules to keep the country from sinking under the weight of what seems to be an almost certain financial collapse. The scope of these efforts in a sharp turn from the previous measures such as the TARP that focus largely on the financial industry, and they've led us to a seminal moment for Bitcoin and other digital assets. So the money printing is beginning to get out of hand. Well, the money printing has been out of hand for a while, and now the Federal Reserve is doubling down by changing the policy and making it seem like, you know what, a little bit of inflation is okay. Maybe we'll see where this whole inflation thing takes us. This is extremely bad for the common man, the person who does not invest. Most of the world does not invest in assets. So this is robbery from those people. So I want to take a moment and I want to look at the DXY. So for those of you who are unfamiliar, the DXY is the US dollar currency index, and it is in quite a scary distribution pattern. So what this is showing me is this is a very typical Wyckoff distribution pattern. In a Wyckoff distribution, it is basically the point at which the distribution of shares, the distribution of interests is transferring from the strong hands to the weak hands. This is indicating a decline. Now, the US dollar index is most influenced by the printing of new dollars. As we print dollars, they lose value. The dollars that you have in the bank account are losing value for every dollar that the US Federal Reserve is printing. The next step in this Wyckoff distribution is a significant move to the downside. This area back here was the Great Recession. We are aiming to see even lower levels than the Great Recession. This is extremely concerning. With the US election really starting to divide the country and this incoming devaluation of the US dollar, it really starts to beg the question, are we going to be okay? Are we going to be okay as a result of this? Now, on the plus side, Bitcoin has been conversely correlated with the performance of the US dollar and currency index. This downtrend in the US dollar, in the DXY here, correlated with the 2017-2018 bull run. So a decline in the US dollar index is traditionally very positive for Bitcoin. Let's just quickly go take a look at the king of all crypto. So Bitcoin is also printing a distribution pattern. This is a bearish pattern. For those of you who are unfamiliar with Wyckoff, it's available online. Go ahead and study it. It's a very powerful method that really focuses on where the supply and demand is and how the shares or assets or coins or whatever you want to call them, how they're being distributed from strong hands to weak hands. And this is a classic. This is becoming more and more apparent that we are in a distribution pattern. So I never try to predict the market. I just allow the market to give me signals to make decisions on how to allocate my assets. And right now, the signals that I'm beginning to get from Bitcoin are on the bearish side. So in a a move in Bitcoin, we're looking for a move to the downside. The last general support range is down in this area right here between $10,200 and $10,000. So we could easily see a move down to that level. If that level does fail to hold us, the next area of significant support is right down here in this range indicated by the VPVR. You can see this red line. This is the point of control. The point of control is just about $9,300. So I anticipate that being a very strong level to prop up Bitcoin. We probably won't spend much time down there. In my opinion, if we do go down there, it'll probably just be a wick and it'll be bought back up to somewhere above the 9,600, closing the stupid CME gap and all that stuff that everybody seems so concerned about. So in the short term, I'm looking for a little bit of a pullback in Bitcoin, but from a macro perspective, if the DXY is going in the direction that it seems to be headed in, those who are allocating their assets into safe havens such as Bitcoin are going to maybe fare significantly better than those who are not investing right now. We already have a very significant wealth gap, and what the Federal Reserve is setting the stage for is basically the richest people are the ones who are going to have investments, real estate, gold, stocks, bonds, etc. And those who don't have those things are going to suffer the most. So if you're on the fence, if you're not in the investment space at all, I highly recommend, not financial advice, but I highly recommend that you get some sort of asset that holds its value against inflation. Gold is something that has done that for a very long time. If you're not familiar with Bitcoin or you're not comfortable with Bitcoin, go with gold, but Bitcoin is basically a digital version that is much better in pretty much every way. So on a more positive note, let's take a look at one of the most talked about cryptocurrencies in the space as of late, and that is Chainlink. So Chainlink has had an incredible rally. And what happens after you have an incredible rally? Well, the shares are distributed to those who are weak investors, new investors, typically weak hands. Smart money was buying down here, and dumb money was buying up here. That's just an expression. I'm not calling anybody dumb, but that's just what it is referred to as. So what I'm looking for, you can see we had these nice volatile consolidation ranges on the way up, and then we really started to take off in the last month, basically, for Chainlink. So there's this big gap here, right in this range right here. I can kind of, I like this double top here. That shows me a good sign of support. And then this range right here, where this, and then this range right here where it came up and bounced off. So this is a very good support range for Chainlink, and that is right between anywhere from 6,200 Satoshis, 62,000 Satoshis, 63,000 Satoshis and 53,000 Satoshis. So we got about a 10,000 Satoshi range for the support level. For those who are wanting me to do for those who are curious as to what that is in US dollars, I don't know, because it's the Bitcoin pair, and Bitcoin is volatile and it changes all the time. The big players in this space, they're not trading based on the US dollar pair. They're trading based on the Bitcoin pair. The OGs of crypto, the whales, the guys that have, thousands and thousands of Bitcoin, they've given up on the US dollar and they're not interested in trading those charts. So I try to keep my analysis based on the Bitcoin pair. So a move down from where we are right now to that support level would be about, ouch. So 50% move to the downside. Now, keep in mind, if Bitcoin starts pumping, Chainlink on the Bitcoin pair is going to start dumping. So for those who are in Chainlink, yes, on the Bitcoin pair, it looks as though it's dumping, but your US dollar value is not going anywhere. So allowing the Bitcoin pair to come down to these levels based upon a Bitcoin pump would actually not only be very healthy, it would be very bullish. So yes, the comparison would look stark and look bad, but I think that it would be really, really bullish. So best case scenario for Chainlink right now is Bitcoin pumps. When Bitcoin pumps, it brings liquidity into the space. When we get liquidity entering the space, we're going to come down, we're going to test the 63,000 Satoshis, and those 63,000 Satoshis are going to be worth more then than they are now. So your US dollar pair is going to be stronger. And from that point, we've added liquidity to the market. The whales have seen the significant drop and they're ready to re-enter, and boom, Chainlink is going to head back up to the upside, probably even for another macro move. Well, that's all the time I have for today. If you enjoyed the content, please like, please subscribe, please comment, and share it. If you are interested in learning Wyckoff accumulation or entering some of the trades that me and my group are entering, join my Telegram link. Become a patron down below. The link is in the description. I look forward to welcoming you into the group. And until next time, we will see you in the next video. Peace.